Good afternoon, everyone. Actually, good morning. We're back with episode 3 of Financial Success. Just to remind you, this is Dalesha's Life, my girlfriend's channel. She has asked me to do these videos for you guys, really. And I'm going to mention it at the end, but I just want to mention it now because she wants me to. Don't forget to check out her other social media, subscribe to the channel, turn on the post notification bell, and she wants you to check out her Poshmark. She's got a lot of things up there that she's selling right now. I don't know if the link is in the description, but if not, go to her Instagram. It's all there. You'll find it. Okay, so Financial Success, episode 3. This one is going to be about using credit. Just to do a quick recap, episode 1 was about being honest with yourself. Episode 2 was about staying disciplined. This one is about using credit. Now, this is really important to all of these episodes. All of these things, all the pillars of this financial success, these principles in each episode are important. They're all very important, really, but this one's important too. And I think I didn't realize this when I first started, and I was about, 21, something like that. It's quite a while ago. And I wish, I also then realized how important it was after I started. Recently, I realized how important it was because of my best friend situation. So, for example, one thing is that you don't want to not use credit. So, a little backstory. When I was in college, I was taking a business course, and this was in 2008. And in 2008, we had the fall of 08. We had the housing crisis, the mortgage bubble, and everything. If you're young, you probably don't remember that. If you're 18 or so, it was just a little bit before you were little. But so it was a big housing crisis. This big bubble burst. A lot of money was going into houses. Prices were going up. Things were selling. Things were just more than they were worth. And the whole bubble exploded. Everything was based on credit, and boom. So based on that, I concluded as an 18-year-old, well, why get credit? Why use credit then, right? You don't want to use credit. It's just a problem. Buy everything in cash. There is something to be said about that. But there's also something to be said about the wonders of the United States as compared to other parts of the world, that we have credit. And that we have credit with such low interest rates, with such an ease, you can get credit and you can use it. The problem with credit is that people buy more than they can because they're using other people's money. And every time you use credit, if you buy a TV, let's say you buy a TV for $1,000. If you buy it in cash, it's $1,000. If you buy it with credit, it's going to be more than $1,000 in most situations because you're going to pay the money back in increments. But you're also going to be charged an interest rate because the person who gives you money has to make a profit as well. If not, he's not going to let you borrow money, which means that $1,000 TV more than likely is going to end up costing you $1,400, $1,500. So the importance of credit. Why I say use credit. So going back to my friend, what happens is he got himself into kind of a jam with his credit score and everything. He started looking to borrow money for this project he wanted to do with investment properties and those types of things, which is fine. But what ended up happening is he was going to a bunch of different places, talking to a bunch of different places. Well, all those different places want to do credit checks. So they're all looking at his credit score. They're all whatever. And what ended up happening, so all these quick money lenders are all calling the credit bureaus and saying, hey, tell me about this guy's credit score. Tell me about this guy's credit score. So eventually they said, well, I don't know what's going on with this guy, but he's probably got some problems. Let's lower his score. So it just kept going down. He also rarely would use his credit card. That's the other thing. He would use it to buy big things. I got to buy a new TV. Going back to what I said earlier. Fine. Now, I taught him, I forced this in his brain, in his head from long ago, which is if you use the credit card, you only by with your credit card what you have in your checking account, or what money you have immediately to pay it off. So on August 3rd, you buy the TV, and on August 4th, you pay it off 100%. Well, the problem was that he was only using it, like I said, for the big purchases, which is fine, but the problem is you don't have that many big purchases in life. Well, you shouldn't, in theory. Part of credit, part of having a good credit score, in addition to having, paying it off quickly, and in addition to that, which is very important, keeping a good credit score, the other thing that you have to do is use it often. So, I don't know, maybe a year and a half ago, maybe now, I got it in my head that, I don't know, it needed to be used always. So what I ended up doing is, and this is going to be related to staying disciplined and all these types of things, and being honest, everything. So here's how we're going to tie it in. So what I did was, in my wallet, hold on. I'm going to show you guys something to give you the example here. Okay. So in my wallet, I got cards right here. So I have, let me show you. Got 2 cards, 1 and 2. So these are both my debit card and my credit card. So what I used to do, sorry about that, guys. What I used to do is I would have my debit card in front and my credit card behind it. Okay? So every time I'd open my wallet and reach for something, I would grab my debit card first. Why? Because I used to follow the same line of thinking that my friend did. And I would keep my credit card in the back and only pull it out when it was going to be a big purchase. Well, that was the mistake. So I thought, you know what? What I want to do is I want to use my credit card for everything. Once a month, then, before it's time to pay off before my bill is due, go on my online banking, log in, pay it all off 100%. Now, you can set it to automatic, and that's another great thing. And eventually I figured that out, and I switched it to like that, do that too, so I don't have to worry about it. But going back to the staying disciplined, it's difficult to say, hey, every time I'm making a purchase, let's say if I'm getting a coffee for Dalesha at Starbucks, or if I'm at the gas station buying something, or if I'm at the store, whatever, it doesn't matter, whatever the case may be. Every single time I have to rely on myself to, that's right, use my credit card. Oh, that's right, use my credit card. No, forget it. It's never going to work that way. If I put that much responsibility and pressure on myself, I'm going to make a mistake. I'm going to forget something. It's not going to work. So what I did was just switched them around. So now, without thinking, every time I go for my card to pay something, the first thing in the front that I pull out is always my credit card. Well, my credit score, like I said, it's been about. Now I had a good credit score before. I'm not gonna pretend that I didn't. But I think I was in about maybe 750s at the time before I made this change. Like I said about switching the cards around. After I switched, it's been about a year and a half. With all the 3 credit bureaus, I'm at 800. I'm at 800 and, 810-ish maybe. So again, it all comes down to being honest with yourself. Putting it like I said, do it in a way that you don't have to think about it. If you don't do it that way, I think you're lying to yourself, thinking that you're always going to remember to grab the right card in every situation. Fine. And it really helps you to be disciplined if you do it that way. If you take the responsibility off yourself, it works. And the great thing about using credit is, so now, obviously, the point of this video is using credit, not staying disciplined and being honest. But I really want to tie these things in because it's important. If you know, for example, let's say, if you're a person that spends more than you have every month, this is not a good idea. It is a good idea, but it's not, because if you have $1,000 to spend every month, and you spend $1,300 every month for whatever reason on miscellaneous things, on things that you shouldn't, debit is going to get you into problems too, because you're going to have overdraft charges, overdraft fees, or overage, whatever your bank calls them. Option 2 would be use the credit card. But the idea is to never use more than you have. So if you say, I got $1,000 in my checking account, great, fantastic. So that means I can spend $1,000 on X, Y, and Z this month. Food or movie tickets or whatever, doesn't matter. Whatever you do, who cares? Better to use it on credit. So go to somebody and say, hey, because what is credit? Let's define this in the simplest terms. Credit is the means by which, and a credit score, the system works because it says, I will lend you money. So person A will give person B some money to borrow, to use. And then person C will keep an eye on person A and B and see how quickly person B pays back person A. So we have three people involved, A, B, and C. Your person B, you're asking for some money to be borrowed, to be lent to you so you can spend it on something. But don't forget that person C is keeping an eye on you to see how quickly you pay back person A. And person A is going to let person C know, yep, he paid me back really quickly, or it took him a really long time, or whatever. Great. So, two benefits to paying it back within the month, within your billing cycle. Number one, you won't get charged interest rates, which means you will pay what the product is worth. Going back to the $1,000 television, you will pay $1,000, you won't pay $1,300 because you'll pay it back within a month. And the other benefit is that person C, who's always going to be keeping an eye on you, always, throughout your life, as long as you have a credit card, he will know that you are to be trusted more than anybody else. Because when you say, let me borrow $1,000, I promise that I'll pay you back within a month, you have years and years and years of history showing that, yeah, you keep your promises. Yeah, you come through. Think about your family member or your friend that says, hey, buddy, can I borrow $20? I promise I'll pay you back. And you know that friend, he never pays you back. Okay. If that guy really treats the rest of his life the way he treats you, the guy's credit score's got to be in the tank. So who's going to let somebody borrow money who never pays back? Eventually, you're going to get to the point you say, hey, I'm not letting you borrow $20 anymore. You never pay me back. I let you borrow $20 500 times. So you got a running total of, $10,000 you owe me, buddy. Forget it, I'm done. Okay, right. Or you say to the person, sure, I'll let you borrow $20, but for every day that goes by, you got to add an extra $1 on. One of the two. But eventually, you're going to come to that conclusion. Well, same with credit. Credit's the same thing. So, but again, if, let's say, this person always pays you back immediately, and he says, hey, let's say he pays you back within a week. Every time he pays you back that 20. And one time, some time goes by and it takes him a week and a half. And he says, look, I'm really sorry. Here's an extra couple bucks because I made you wait a few extra days or an extra week. You're going to say, wow, great. I can really trust you. I can really let you borrow money anytime. And in fact, I can let you borrow a little bit more because I trust you. I know you're going to pay me back. Okay. So the importance of using credit and having this financial success and having this stability and this I struggle to find the right adjectives and really in the right nouns really to describe what I'm trying to get across here. But it's all about, like I said in both of the other videos, it's all about your philosophy of your own finances, of your personal finances. You have to accept the reality that by the time you become 18, you will always have somebody looking over your shoulder to know how reliable you are with paying back money that you borrow. Now you can say, well, why borrow? I just pay everything in cash. Yeah, fine. Like I said, I followed that premise before too. This condo that I live in, I bought in cash. Now to be fair, it was very inexpensive. I live in central Illinois. I mean, we have the three big cities in this area are each of about 120,000 people, and they're all about an hour and a half apart. So, I mean, this is not big city, this is different. So, it was a different story for me. Does that mean you can't do it? Absolutely not. Anybody can do it. But the idea is this. going about life, buying everything in cash, I still do that. But I know that if an emergency comes up, something that you can't foresee, because life will throw curves at you that you can't foresee. That's part of life. You can plan, you can predict, you can do everything that you want. I can't tell you the amount of people that I met that I became really close to when I worked for the state. And they're in other places really. And they started in, let's say, their early 20s, their mid 20s. They built a career. They were investing. They were putting money away. A few months before it's time to retire, a year before they reach the retirement date, big medical problem, cancer, or the beginning of Parkinson's. Not Parkinson's, but I'm giving examples. Debilitating, life-threatening diseases befell them. And I don't care if they had $100,000 or $100 million saved up. It doesn't change that reality. That's not going to prevent that from happening. So, being that what it is, you want to plan for the unexpected. And the only way you can plan for the unexpected is to accept that the unexpected will occur. And one of the best things you can do is to use credit all the time so you have a great credit score. So when that happens, when that time comes and that thing happens, you say, I don't have the money, I don't whatever, but guess what? Every banker, every lender, everybody is going to bend over backwards to let me borrow the money because they know that I'm going to pay it back to them immediately. They're going to get their money back from me and it's going to be no harm, no foul, because I've demonstrated over a lifetime, over years, over whatever amount of time, that I'm to be trusted more than the next guy who's asking for the same amount of money that I am. So you have to, this is another thing that when I mentioned about being disciplined in the last one, I was mentioning mostly about your savings, your investments, moving your money, etc. But this is also one thing that you need to stay disciplined on too. You can move, I said about moving your money from your checking to your savings, let's say, or to your investment account. Another thing is moving your money from your checking to your credit card. So think about your checking account is the pot of money that you have. So you know you're going to use that pot of money, but first use somebody else's money. And then use your pot of money to pay back that other guy. Because when you do that, you always know, because we talked about it in this video and you should know, you probably knew beforehand, that there's always going to be somebody else, a third person, who's watching you to see how you manage your money. So that's the way that I believe that you should always do it. It's worked for me so far. I don't foresee any problems with that. And again, the easiest way to stay disciplined is to be honest with yourself, which is that if you make it too difficult for yourself to always use your credit card for every purchase, big and small, you won't do it. You're going to forget sometimes, you're going to make a mistake. Let's say you make 15 purchases a month. Well, if 12 of them you use your credit card and you forget 3, is it going to make that big of a deal? No, of course not. But why not be 100%? If all it takes is to switch the cards around in my wallet, or whatever your equivalent is, to make it so that you can't get to your debit card easily, make it in a way that remove the thinking process portion of that, remove the thinking portion of that process. Well, then you can be 100%. Why not? So, using credit is very important. Buying in cash is important. And I still recommend buying everything in cash that you can. But you buy it in cash, but remember, the cash that you pay, if you buy a TV, you don't give the cash to Best Buy. You use the other guy's cash, so your credit card, right, the bank's money, to pay Best Buy. And then you pay the bank, because the bank is going to give you a benefit for paying him back. Best Buy is not going to give you a benefit. So you can buy a $1,000 TV with $1,000 from pot A or from pot B. It doesn't make a difference, except the difference that it makes is that if I do it from using one person's money or paying somebody back, I'm also getting the added benefit of that person saying, hey buddy, if you ever need money, you come to me, I'll take care of you. That's great. Best Buy's not going to do that for you. You can buy all the TVs you want and pay them right then and there with all the cash that you want. They're not going to say, hey, when times get tough or when you need a hand, I'll help you out. No, they don't do that. So creating these habits so you can be 100% and you take the thinking process out is the best. What I also did, now remember, this only works if you remember religiously to pay your credit card statement bill, every month before the statement is due, before it's due. What I would suggest is, and this is what I do, you go online. You can go to your online banking, or if you don't want to do that, you don't have to. You can go to your bank in person and say, hi, here's my ID, here's my name. You sit with a banker and they look, not a teller, but a banker, right? They look you up. Okay, what can I help you with today? You say, when is my credit card statement due? Let's say, in my case, it's the 19th of every month, okay? So I say, okay, on the 18th of every month or the 17th of every month, I want 100% of what is owed to be removed from my checking account, which is also with you guys, my bank, right? And put into the other bank, put into the credit card account to pay it off 100%. If I depend on myself to do it, I could make a mistake. I could forget 1 month. There's no need to do that. Especially because I know, now you may say, well, how do I know I'm going to have the right amount of money? I'm going to have all the money I need. Well, again, you don't overspend. You either overspend with your credit card or you overspend with your checking account, your debit card. But one way or another, if you're going to overspend, you're going to overspend. So obviously, the big picture here is don't overspend. I didn't think that needed to be an episode in itself, but I think that you can't be financially successful if you're spending more money than you make, obviously, because you know what's going to happen. You're just going to get deeper and deeper in the hole, etc. So, I guess to summarize this, credit is important because of the credit score. Other than that, when your parents, when you watch shows or movies when you're a kid, or when your parents say, hey, I'm going to give you a credit card, but it's for emergencies only. Okay. Well, they're right. It is for emergencies only, in the sense that you use it to overspend or to spend more than you actually have. My suggestion is that you use it for your daily tasks, your daily errands, your daily expenses, assuming that you don't overspend. So if you have $1,000 and you're going to spend $900, all that $900 you use your credit card. If that month you're going to spend $900 plus an additional $1,000 because you have some emergency coming or something coming, that's an emergency. If it's an emergency or something like that, you use your credit card. But if it's going to be a regular thing where you have $1,000 but you spend $1,500, don't put it on your credit card, because you're not going to have the money to pay it off, and all that's going to do is just going to tack on interest. So if you pay off $1,000 because that's what you have, you're going to have $500 left over. They're going to start adding interest, and if interest is, let's say, 10%, okay, that's $50. So $50 is going to keep getting added. If it's 20% interest, it's $100. It's just going to keep going up. So you're not going. So what's going to end up happening is every month that goes by, you're just 50 more. All of a sudden, it costs you, 1.5 times what it was worth. There's no point, no need. And remember that to do what I'm suggesting, to do what I'm proposing, you need to make it easy for yourself. Take the thinking out. Take the thinking out of the entire equation. As long as you leave it in there, you allow yourself the possibility of forgetting, making a mistake, using the debit card by mistake. And there's nothing wrong with using a debit card, but you just don't get a benefit. Your credit score does not get affected, and there's no benefit for you. So my suggestion is don't do that. And when time goes by, what you'll do is you'll create a habit for yourself. As long as you take the thinking equation out of it, you'll make it into a habit. And if it's a habit, you won't think about it. And before you know it, time's going to go by, you're going to look at your credit score, and it's going to be significantly higher because you're borrowing for everything and you're paying back immediately. You will be essentially the perfect person to be given money. And that's the position that you want to be in life. There was well, I was going to use an example of an historical example, but I don't really think it's applicable here. So let's not worry about that. And I think I may just muddy the waters and overcomplicate something that I don't think needs to be that complicated. And like I said, we take the thinking out of the equation and it makes it a lot easier. So, like I said before, thank you for watching episode 3. And it appears that we're going to have one more episode. So if you have any questions, comments, concerns, etc., leave us a comment, whatever. I'm trying to simplify this and make it as common sense, I guess would be I want to make it as simple as possible. This is not complicated. This is not, you don't need to have a degree in business, management, investments, anything like that. You don't need to be a Wall Street executive to understand any of these concepts. These are basic, these are large, broad financial philosophies or philosophies of your own personal finances, of life in general. What I'm suggesting in these videos will allow you to have a more carefree life, financially speaking, and will give you the freedom or the liberty to address a complicated, unexpected situation when it does arise, because we know that those situations will arise. And if you can be prepared for them, better to be prepared than to be caught off guard. And, right? If a difficult situation happens, you don't want to make it even more difficult by having to ask somebody to help you out or to bail you out or put yourself, I can pay for this, but if I pay for this, I got to use this other thing. It's going to get me in the hole, or it's going to get me in trouble with this other guy. No, there's no need. So then all you're doing is tipping the scales from one thing to the other. There's no need. If you put yourself in a position where you have more than you need on one side of the scale, on the side that you're on, when the other side of the scale, becomes a problem, you have enough extra that you can balance the scales out. No harm, no foul. Episode 4 will be the final one. Unless somebody makes a request or wants something else to be discussed. That'll be next week's video. So make sure to subscribe to Dalesha's Life, to subscribe to this channel. This was a series suggested by her, as I said. And check out all the other videos that we do together that she does by herself. She does hauls, she does vlogs, and just daily life, things like that. Turn on the post notification bell so you can see when updates come. And she tries to update videos Mondays and Wednesdays as much as possible. And, share the channel. And she really wants you to check out her Poshmark. She's got some clothes up there. She's got some jewelry and some things that she wants to sell. So check it out. And we'll be back next week for the final installment of this video. Thanks for watching, and don't forget to subscribe and share the channel. See you guys later.